What's up, guys? I'm making a trade recap on the longs I took on Thursday, April 16th. They were honestly some of the easiest longs I've taken in a minute, and I wanted to show you guys how I took those longs using order flow and options flow. So without further ado, let's get into it. So before I even look on the charts, whether it's TradingView or deep charts, I do the following. I pull up MenthorQ, and I've spoken about it a lot in the chat, but this is the first time I talk about it on YouTube. Alrighty. So what MenthorQ is it basically calculates option flow. It calculates the option positioning in the market, which is absolutely huge since option positioning is one of the biggest forces and liquidity in the market now, especially if you're a futures trader. So before, like I mentioned, before I even look on the charts, I want to look at a few things. I want to look at the gamma environment, right? I want to look at CLC system, right? Context, location, and confirmation. What's the context? What's the environment that we're opening up? So what I do is I want to look at the environment. So for example, I know if we're in a positive gamma environment, we're not going to really be looking for these huge explosive moves on the chart, right? We'll be looking for something a little bit more stable, right? More choppy conditions. And now that doesn't mean that we can't go up, right? And it doesn't mean we can't go down. But what I'm saying is it's not going to be the sexiest, prettiest trend we've ever seen in our lives, right? That's a little bit more on negative gamma regimes, right? Okay. So now that we established that we're in a positive gamma regime, right? After that, I take a look at my very good friend here, the NetJex chart. On this NetJex chart, I can look at the positive gamma, the negative gamma, and as we can see, the positive gamma clearly outweighs the negative gamma by a ton, right? So I really had a lot of confidence going into the day that we were going to be seeing some more mean reverting models, right? We were going to be seeing a little bit more of choppiness, more fake outs, right? Not so much of expansion moves, whether it's up, like to the upside or to the downside. So with this in mind, right? Now let's hit the charts. All right, so here's the trade, but I'm going to do two things. I am going to go back in time with the replay feature so you guys can see what I was seeing in the exact time. But even better than that, what I do is I screenshot all my setups in real time because I know that these volume profiles can move, right? Gamma levels, for example, how I trade, right? They're not on the chart anymore, right? So what I did do is I screenshotted my entry, right? And how the trade ended up playing out. So this could be a more accurate trade recap. So with this in mind, right, I did the following. And just so you guys can see, right, this is QQQ, right? This is the 16th, and I had posted this at 10:13 a.m. Same day, same chart. All right, so this is the reason why I ended up taking this trade. So on QQQ, right, as we can see, we're dumping right off the open, right? We've been dumping right off the open, and we see a massive move to the downside, right? And quickly, we go under the POC, which is depicted by this pink line. We go under VWAP, which is depicted by the yellow here. I don't know if you guys can see it, the yellow cross here. Let me make it a little cleaner, right? This yellow here. And then this white line is the value area low, right? Everything in the inside is what the market deems fair value between the buyers and the sellers, right? If any of this is a little confusing, I would highly recommend watching my auction market theory video, which is posted on the YouTube. But even though we saw this massive red candle, I wasn't exactly sold on the downside just yet, especially after looking at MenthorQ and looking that we were in a positive gamma regime, right? So I wasn't really expecting us to just be collapsing the entire session. But there were a few things, a few confluences that I used in this exact trade, and these are the following confluences. So this blue line here is a GEX level, right? This other blue line is another GEX level. On the right-hand side here, I have standard deviation bands, right? So here I got the third, right? We have the second, and here we have the first, and over here we have the first, second, and third. The yellow one is VWAP, right? It's anchored towards VWAP. I did use a website called Profitabul, and I can't take all the credit for it. My friend Baron did put me on to this website, and this is not no promo. This is a fully free page, and I have no affiliation or deal with Profitabul. Would be nice though. So what is Profitabul? With Profitabul, what you can basically see is all these reports, all these stats, right? Real stats, none of this just lines on a chart, right? Real stats that is calculated by Profitabul. So for example, this is the VWAP standard deviation return. It calculates the return rate from each standard deviation band. So here we see a 68.8% from the first standard deviation band. We see a 96.4% return from the second standard deviation band. And then we have a 92.6% return rate from the third standard deviation band. So with this in mind, once I saw that we were overextended to the downside, right? I wasn't really expecting these massive moves to the downside because of the positive gamma regime. And if you guys can see, right, this is the first, this is the second, and this is the third standard deviation band. So the third standard deviation, if you guys can see, it's this purple line right here, exactly from where we're bouncing, right? And this was off the open, right? This was very, very classic, right, for the market off the open. So once I saw a drop under, we came back above. Not only did we go back into the fair value, right? We had now gone above the value area low depicted by this white line and this red line I just drew, right? We had also regained and bounced off the third standard deviation band. And I did have a good idea that if we did hold the second standard deviation band, we were just going to shoot up right back into VWAP. And that's exactly what ended up happening. On this trade, it was beautiful, ended up being a 3.3R trade. So we can see it on the trade replay here. Alrighty, I'll bring it back in time. It was at 10:04, so alrighty, perfect. So as we can see here, we were in discount, right? Since we were under this value area low, right? Hence us being in discount, right? And I won't lie, this was a little bit of a riskier trade since we were still under this value area low. So technically we could have just rejected here and then gone even lower. But I did have a tight stop in case that did happen. And of course, it was because we were bouncing off the third standard deviation band mixed with positive gamma regime, right? It stacked more confluences, which gave me more confidence in this trade. I didn't get in on this candle right here on this momentum drive above the value area high. This is where I ended up getting filled. And the very next candle almost went into my take profit. I did not get filled, I'll be completely honest. But on this next candle, this is exactly where we went right through my take profit for a nice 3.3R trade. All right, I'm gonna keep making more videos just like this. If you guys have any questions, make sure to drop them in the comments and I'll see you in the next video.